Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today we are on Monday, 7th of November. During the time of 5 to 5:30 GMT, I'm going to give you the forecast for this particular week. This is considered as a very significant week because once in 4 years we come across the US president election, and as a result the market envisage who is going to be the new president, and based on that we come across specific type of moves, whether it is US dollar weakening or US dollar gaining moves. So we need to find out, based on the forecast algorithm, what could be the possibilities and derive what could be the chances with regard to the presidential candidates. So I will explain to you the expected market moves from Monday to Friday of this particular week, 7th to 11th of November. And also I'll do the market reading using the live market code page and fine-tuning of the forecast, considering the initial lows and the highs set for the day. Then I'll also touch upon the trading strategy we should use in order to capture good profit during this particular time of uncertainty. And market uncertainty is a perennial problem because we do come across day in and day out some important events happen, and the market is expected to react for such events. And last week we come across the BOE interest rate decision and also the non-farm payroll release during the monthly trend reversal time. And as envisaged during last week, I have given the forecast that they started gaining the levels in the case of Euro and GBP, much against the expectations of many. And along with that, they also gained the levels in the case of USD yen. This is what they do it every week. So we need to understand how they are making the moves in order to trap the traders. So we should avoid getting trapped again and again. And that is a smart way of trading and earning money from the other market. So ultimately, you do come across every time the events are bound to happen. And the market is expected to show knee-jerk reactions for such type of news and or the data release. And such knee-jerk reactions we need to read beforehand so that we'll be able to really capture good profit during such time. So for that, we need to read the intentions of the players from time to time. The intentions of the players continue to change every 30 minutes depending upon the traders' accumulated positions. So when the traders are totally long in euro in 30 minutes time frame, then immediately the players make a downward stop end. And if the traders have taken huge sell position based on the fundamentals, then the players make an upward stop end. So understand that the players create the market sentiment and act against that of the traders once they commit the positions. This is what is going to happen every session of the days we come across. And now we come across the daylight saving system is switched off, or there is a shift in daylight saving system, and as a result in Europe and US you come across the standard time is being followed. So from now on you will come across the standard time is being followed. I will show you the slide wherein the new market timings are being displayed from this week onwards till the month of March 2017. We will be following that particular time frame. So we will go one by one. First of all, the forecast. So the derived forecast I'll explain to you. Now this is the first week of the month of November. Earlier week was having the combination of October ending. As a result, they made volatile moves, or the month end and the month beginning trend reversal moves. So they made the drop quickly and also rise quickly. Alternative moves, they have done it in order to trap the traders on either side. Now, from this week onwards, they are expected to make the less drop and more rise moves in the market. So, as a result, we'll come across the week beginning false move today, being the first day of the week. And also the session timings I mentioned, which is modified session time based on the shift in daylight saving. So as a result, 0030 to 7:30 GMT is the Japanese session, and 8 to 14 GMT is the European session. Then 14:30 to 21:30 is the US session. In between 30 minutes here, you come across the gap time, and after that of 21:30 up to 0030 GMT of the next day, there's a gap time between the days. So you need to find that gap time that make false moves, and you can do the gap time trades also. They quickly drop, you can take a buy. They quickly rise during gap time, you can take a sell and book profit within 30 minutes from the start of the session. Now today 7th, they are expected to make the swing and slide move during the Japanese session, and then start rising from that of the European session and firm up during that of the US session also. And tomorrow, 8th of November, it is going to be the election day. But the election starts from the early morning of the US timing. So before that, what they are expected to do is make a quick drop or a dip and firm up. So create the uncertainty by making a downward stop and start firming up and rise and firm up during that of the US session. So everybody will think that the election result is going to be very clear, and then late night will come across the uncertainty could be created, and as a result you'll come across the dip in the case of Euro and GBP during that of the early morning, and then start rising it. Then again you'll come across, based on the speculation and based on the exit poll, etc., they are expected to create the uncertainty, and then they are expected to rise during that of the European session and then drop during that of the US session. Everybody will be wondering that expected candidate has become the US president and why that drop has happened. That is what people will be wondering. And that is how they make the moves, they create the market sentiment and act against that of the traders. So once the expected candidate, namely Hillary Clinton, is being elected, there will be firm up during that of the Japanese session and also rise during that of the US session. And again, they are expected to drop, and they will say that the policies are going to be different and there could be USD weakening because of that. So that is how they will make the moves. And then on Friday, they are expected to make the dip and then firm up and swing and slide during the European session in order to induce the long holders to liquidate and start firming up. Then from next week onwards, we'll come across swing and quick rise moves happening in the market, and that will create the surprise against that of the traders. What they have been talking about during this week are being discounted, and then the market is under the grip of risk appetite. So that is how they are expected to make the moves, and that move will be till mid-January 2017. They are expected to make very aggressive gaining moves in the market during the month of November and more so during the month of December and early part of January as the yearly trend reversal move. Always you know that the quick moves are false moves, and the players are expected to make every single announcement to their advantage and try to gain quickly the levels in the case of Euro and GBP, and surprisingly they will be gaining the levels in the case of USDN as well as USD CHF. And the commodity pairs, namely USD CAD and Australian dollar, are expected to make the wide range swings on either side. Now looking into that of the market currently, how they are, Euro is showing about 66 pips negative net change, and USD Yen is showing 1.35 pips, 135 pips positive net change. So they have started showing the USD gaining move. And also GBP around 66 pips from that Friday close as the USD gaining move. CHF also gained about 70 pips from that of the Friday close, 79 pips. Then, as far as the commodity pairs are concerned, USD CAD has made a dip, that is USD weakening move of 13 pips. Australian dollar has done 1 pip negative net change as a nominal USD gaining move. So you find their commodity pairs started showing the contrarian move. So this is how they just make the week beginning moves. They start with the commodity and commodity pairs and commodity crosses, and then come to that of the yen crosses and yen, and finally to that of the majors and that of the European crosses. So that is how the sequential trend reversal they make it. And during this time, you will find aggressive move will happen in the commodity crosses to start with, then yen crosses to start with, then the majors, then finally the European crosses. They will make contrarian moves in order to bring in volatility in the case of the European crosses, namely Euro CHF, GBP CHF, and also Euro GBP cross. Now, with regard to the levels in which the currencies are expected to swing during this particular week, Euro could come down to 1.09 during that of the downward stop and moves, or an extended downward stop and before making a rise to 1.13. And GBP also could come down a little bit to 1.2350 area. They are all mathematically derived levels. So around that level, they will be turning around and then start gaining the levels to that of 1. So there is a typo here. So they could go to 1.2750 later on. Then in the case of yen, they could come down to 102.75 and 105.75 could be the high. They could make one extended upward stop and start dropping USD yen when Euro and GBP are rising. So when Euro and GBP are rising initially, they will gain the levels in the case of USD yen as a contrarian move and then suddenly make the drop in the case of USD yen that will trigger Euro and GBP to go up. And again later on they will gain the levels in the case of USD yen. So that is how they will just make the moves. So they use USD yen as the catalyst for the market to get the trigger and change the market sentiment. And USD CHF, it could come down to 0.9650 and 0.99 could be the high during the swing. And in the case of Canadian dollar, it could come down drastically to 1.3150 from the 1.34 area. And slowly they will make an upward stop and start dropping. And in the case of Australian dollar, they could make a downward stop and then start gaining the level to 0.7775 area. So these are all the expected ranges in this particular week. You can monitor slowly, and on Friday I'll update the actual levels on a daily basis and show you how exactly they made the moves in the market. Then you will be able to understand how these calculations are reliable. Now we will come to that of the market reading. So I noted down the initial lows and the highs around 3:30 GMT from that of the live market code page. So Euro formed the low at that time 1.1055 and the high was 1.1141, and both the high and the low are not breached. In the case of GBP, 1.2457 is the low, 1.2498 is the high. They just breached the low 1.2557 and staying below that, indicating that they wanted to make another drop for 2 hours as an extended move and then start gaining the levels. From the time of cutting the new low, It will take 2 hours and then start gaining the level. Watch that. And the new low, when they form and stop cutting the new low, for 30 minutes you can take a buy during that of the late Japanese session. In the case of yen, 103.79 is the low, 104.47 was the high. They just made a brief upward stop into 104.50 and come close to the 1.0447, and they are expected to hold like this for a brief time, or probably for 2 hours, and then start making the drop without cutting the new high they have formed. In the case of CHF, 97.30 is the low, 97.74 is the high. They have not breached the low or the high still. In the case of Canadian dollar, 1.3344 is the low, 1.3391 is the high. They have not breached the low or the high. Then Australian dollar, 76.59 is the low, 76.85 is the high. They are not breached. So you find the activity only in the case of USD yen and GBP to start with. So that means they are handling USD yen and GBP now in order to bring in the volatility in the case of crosses, GBP related crosses and yen related crosses. And also by making a contrarian move in the case of commodity pairs, they are bringing in the volatility in the case of the commodity crosses also. Namely, Euro Canadian dollar or Euro GBP Canadian dollar, then Euro Aussie, GBP Aussie, etc. Now the recommended trades for today. Euro could come down below the initial low, what they have set. Probably during the downward stop, and you can pick up a buy, and later on during that of the European and the US session, they are expected to gain the levels, and you can book profit. And in the case of GBP, I recommended either way stop, either way trades, sell around 1.2485 and book profit around 1.2375. Already they have made the drop, and little more drop is expected as a downward stop, and at that time you can make a buy around that of 1.2375 to 1.2392 level, and then keep the hedge order 1.2340 to limit the risk, and they are expected to gain the levels. And in the case of Australian dollar, 76.25 around that level, they'll make a dip. And if it is 76.90, they show you can just during that of the upward stop, and you can take a sell, and then you can do either way trades. So they're expected to make the wide range swings today, and you can watch carefully and trade. And they will not make any big move on the upside or on the downside, because tomorrow is the election day. Before that, they will not make any big move in the market. So keep in mind that any upward stop is a sell opportunity, any downward stop is a buy opportunity. Then this is the time frame we need to follow from the 6th of, so the date I need to change. So from that of 7th November, Monday, that is from today. Yesterday, the daylight saving system is shifted in US, but as far as market is concerned, from today, the timings will be changed. So 0030 to 7:30 GMT is the Japanese session. 7:30 to 8 GMT is the gap time. Then 8 to 14 is the European session. 14 to 14:30 GMT is the gap time before the start of the US session. 14:30 to 21:30 is the US session. Then 21:30 to 0030 is the gap time before the start of the next day. And Japanese session is divided into early, mid, and late sessions. So you find the modification in the late sessions from 6 to 7:30 instead of 5:30 to 7. Then you find the early session from 8 to 9:30, and that of the mid session 9:30 to 12:30, and then late session is from 12:30 to 14 GMT. Then the US session is subdivided into early session 14:30 to 16 GMT, and 16 GMT, 16 to 20 GMT is the mid session, and 20 to 21:30 is the late session. So these are all the session timings for the day, and you can follow it till March, this time frame. So you can take a screenshot, or you can just make a note of it. Otherwise, you can get it from the recorded webinar and then try to follow the timings. You will find exactly the moves will start from those times. Then you will be able to really understand that following the timings followed by the player is very essential in order to incorporate time frame into the market study. Because you know the chart study does not indicate the time frame. It might be called as the 30 minutes chart, 1 hour chart, etc. as the time, but exact time of the day will not be taken into consideration to understand what sort of moves they are going to make it in the market. So if you've got any question, you can ask me the questions in the question answer window here, and I'll be able to answer those questions. And I'll come back on Friday, 11th of November, and review the forecast, what I given it today, and also we will see by then discuss about the US election outcome, how exactly when the expected candidate was elected, still they made the market to come down to start with, to create the confusion to the traders, and then later on they will try to gain the levels in the name of risk appetite. So if you got any question, kindly ask me. So this is the expected market moves for the week. They are expected to make either way stop-ins today. So either way stop-ins or good trading opportunities. It might appear US dollar gaining, US dollar weakening moves alternate. And that is the way they operate the market. Only then the sentiments can continue to change, and the traders will be surprised, or they will be wondering whether there is going to be US dollar gaining or US dollar weakening move in any given moment. And that uncertainty, the traders try to reduce it with the help of the charts or reading in depth the fundamental analysis. Invariably, they come to the conclusion that if at all euro rises, it can go up to that of the resistance. If at all it drops, it can come up to that of the support. That is how either way studies are being made. As a result, it does not help anybody in taking trading decision. It might be arithmetically fine to take a decision. We can say when it comes to the resistance, we can sell. When it comes to the support, we can buy. But later on, when it comes to the resistance level, then this new study will say that probably there is a second and the third resistance level, and that could be the sell opportunity. And invariably, the traders will get confused. And this is what's happening. And the players want that to happen in the market. Only when the traders are confused and having that uncertainty, and it can be either of their own study or induced with the help of the technical analyst, thereby the traders commit wrongly following the market sentiment. And then they say simply the market trend is your friend and commit positions accordingly. After the drop, the trend says that you sell, and after the rise, the trend says that you buy. But later on, when you don't book profit smartly using a trading strategy, you are trapped vulnerably. And later on, you see that you have done a highest level buy and are sold at the lowest level. So don't commit such mistakes in the market again and again. These are all the ranges in which the currencies are expected to swing. I'm not seeing any question coming forward. These are all the initial lows and the highs for the day set. And this is the trade recommendation for today. When they make it downward and the upward stop ins, you can take the positions, and that could give you real profit making trade. Still, you try to do it in a demo trading platform in order to understand the dependability of the forecast. And these are all the new market timings from now till March 2017. Okay, more question is coming forward, so I'll try to conclude the webinar. Okay, I take this opportunity to thank FX for the facilities provided to present the webinar, and hope you are able to understand and find the value in the forecast what I have given, and try to make use of it objectively and try to understand that the market is manipulated, and then we need to understand the strengths and weaknesses of the players who play in the market, and accordingly we have to trade along with them rather than following the market sentiment. Wish you all happy trading. See you by weekend, and then I will come for the review of the forecast what I have given, and we will also come to know about the results of the outcome of US elections, and then how the scenario is going to be in coming years. Wish you all happy trading. See you on Friday.